Hi there traders, so I'm going to start, you can obviously see me on video now, so I'm going to start doing this so you can actually see me as I review these trades as well. So this is our report from Wednesday. We got those US CPI figures out on Tuesday lunchtime, which sent the market into a really big spike down, and then we had like a consolidation period, which meant that the impulsive nature of the market was to the downside, which meant that we was going to be looking more for shorts. So we said on the DAX, we said if we saw an inventory correction back above the 13,115 to 13,135, then 13,165 to 13,190 could offer resistance. You can see that commentary here. Now, what I mean by an inventory correction is the market opening below where the previous day's market closed. So there's a gap in the market, and often the markets, the institutions will want to fill that gap, and that is what is known in the markets as an inventory correction. So if we saw that inefficiency filled, then that 165 to 190 area could offer resistance. So now let's go and have a look at the DAX from Wednesday. Okay, so this is the trade that we took. So you can see this here, this drop that started here was on Tuesday lunchtime. It caused a drop in the market. This followed through a little bit of downward corrective action, but you can see the momentum is always staying with the downside. And even when we got to the base round here, we held below this 13,115 to 13,135 zone, which we had as a key resistance zone. So we what we did is we analysed the market, and we said that, you know, this was if the market held below here, we was very weak. However, there was the potential for that inventory correction that could go and try and fill the gap that was in this area here. This was where Tuesday's closing price on the DAX was. So that's sort of a bit of the context of the market. So when we're analysing the market in the morning, we're looking at it and saying, okay, so overall bearish, therefore we need to concentrate on sells. Where are the best areas in the market to actually look for those shorting opportunities? Now, obviously, one was this area here. That was a key resistance area. But it was always a chance that we saw that inventory correction back into this zone here. So this was another one that we was looking at. Now, if we zoom in now onto Wednesday's price action, we had this first initial signal here. Now, this works very nicely. If you had taken this one, it's not a bad trade. This little towel on it there meant that I wasn't so keen myself on taking it. When I look at positions to take, I want them to show that the bears are in full control, even on the signal candle, when I'm looking for shorts. So this one wasn't necessarily the best one for me. However, you can see this one actually still worked quite nicely. The risk to reward also wasn't the best on this trade back into this zone down here. So later on in the session, it got to sort of like still early on, still within the first 2 hours of the session, we then come back and we retested this area. Now notice that the high of that previous high there was this level here at 13,184.9, and notice that we just took that liquidity grab that we always talk about. We always talk about these liquidity grabs where we just peak above an area. So anyone who'd got short in this zone here, from this signal, they would have their stop behind that signal there. So therefore, that's an area of liquidity that the market will want to go and take. And we got this much stronger candle. Yes, there's still a small tail there, but it's nowhere near as big as this one. It's still right at the bottom of that candle, another good signal. And this is the one that we took, especially with the fact that we had taken that liquidity grab as well. We'd gone back, we'd retested that area, we'd taken that liquidity, and we entered a short on the break of this candle. We had a stop just above the zone. Because we'd already grabbed the liquidity, it had no reason to go back there again. And we could actually have a target down here in this zone of 1.5 to 1 risk to reward. So we're just targeting the zone. Notice again as well that risk to reward is better on this trade because our entry is a little bit higher, slightly better signal, and we've got that liquidity grab. So it just gave us a few more reasons and a little bit more confirmation that the signal was better. So again, even though we've got this signal here, you don't always have to jump in. You should exercise some patience, and we got that second signal. And it also, again, Really strong reaction from that zone there. Corrective pullback. Notice that's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. 27 candles it took to retrace a 5-candle move. So that shows that the buying power wasn't as strong as the selling power, which meant that the bears, it was still communicating to us that the bears were in control. So lots and lots going for this trade. And as we moved on, you can see we moved down quite nicely and hit our target down here. And that was a nice 1.5 to 1. Oh, actually, that trade was still going. I think, yeah, there we go. We hit our full target there. So this trade we was in for just about an hour. Nice 1.5 1 to risk to reward. Lots of stuff going for it, and that was why we took it. So I hope you found this useful. Like I say, when you see those big spikes, it's always good to stay with that side of the momentum. It's just really important to identify the right areas in the market to look for those reversals, and that's why we issue our key zone service reports. We do this for the FTSE and the DAX every morning. We do this for the S&P and the Dow Jones every afternoon. I'll leave a link to the key zone service in our social media text boxes, and also in the comment in the box below on our YouTube channel. Please come subscribe to our YouTube channel where we review review our reports every day, and also sign up to the Key Zone service. It's completely free. You get to come be part of the Key Zone Traders community, and you get these reports every single day before the markets open, so that you can really add value to your trading. You can also use the reports to practice your pattern recognition skills in this replay function on TradingView. So it's a really, really valuable tool that you can use, and it's completely free. We issue it completely free here at Keyzone Traders. So if you haven't already, please come sign up to that Keyzone service. I hope you found this useful. I hope you're going to have I hope you had a great week, and I will speak to you again soon. Cheers.